Hi, I'm Mark Rosano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today we're going to look at the global economy. We're going to break it down into our normal 5 segments. But the first one is going to look at food in a much deeper dive. So first we're going to start with geopolitics, and we want to look at what's happening in Cuba, what's happening in South Africa, and how does China play into some of this, just given where some of their investments have been. And then that feeds us into where are we with food? Where are we with food inflation, food supply? Where is it going overall? Because there's a lot of movements now that we have WASDE data and some of this pricing information as things continue to get stressed, because it really factors into where are we in South Africa, in Cuba, in other emerging markets, as I did an article on Lebanon, Sudan, and Iran, looking at just this exact thing, food shortages, a lot of anger. Lebanon, there was another problem. Some individuals have already quit in Cuba, or I should say resigned. So then after that, we're going to go into greater depth when we start going into inflation, our favorite topic. We're going to break it down into CPI, PPI. We want to see where is CPI now, what isn't priced in yet, what is already priced in and coming lower, i.e. rent is going up, but obviously used cars are starting to come down. But then when we go down the supply chain, where's PPI? Where's supply chain problems? Where's pricing? When we look through, through that lens, then we're going to go into what are Fed rates mean? Because the Fed is saying that they're keeping rates at X, Y, Z. Why is that the case? What is happening to the underlying when we look at the 10-year, and how is that impacting borrowing and whatnot? Then we're going to turn to emerging markets and look at emerging markets, where are they on the rate cycle, because inflation is going to impact them differently. And that's something we wanted to kind of carve out a bit, followed by a bigger breakdown on Europe at some of the key countries and some of their data sets. Then we're going to turn to Asia and break that into 3 different pieces. So it's going to be China, which obviously it's, why not? Because that's our favorite topic. And we're going to look at what does the triple R cut mean? And is it really going to be meaningful for where we think Q3 growth is really projecting? And then we're going to go into India. What are some of the data sets that have come out of India recently? And then wrapping up with Japan, just based on some of the key data sets that have come out over the last couple days. So before we do that, again, please like, share, subscribe. Your support is appreciated. Oh, and by the way, thank you for some excellent comments. People either giving feedback, asking for feedback, and just being supportive. We truly appreciate that. So when we look at some of the investments in Latin America, we just wanted to call attention to not only Latin America in general, when we look at Brazil and Argentina, because a lot of this is really coming down to food. They need food, they need a lot of expansion capacity, and they've been a big buyer of, where droughts have been very prevalent, resulting in a lot of pain when you think about movements on yield, but also moving the product from the farm to the port, the staging area. It's just, as you have droughts, the water levels drop, which means that you just can't fill the barges the same way. Again, just increasing some of these problems. So then when you look at Cuba, which has seen a significant amount of protests, a lot of pressure on the government to kind of break away from this communist backdrop, several people have just recently resigned. Just because there's this growing pressure. But look at how much China has invested. When you look at Guantanamo Bay, right next to 40 miles away, China invested in expanding that port. There's a lot of trade that goes on. So when we think about the trade, Cuba is the northern outpost of the Belt and Road Initiative in the Caribbean. So if you think about how important Cuba is on a strategic level, i.e. going back to the Russian missile crisis, it's very close to our borders. We actually had the U.S. Coast Guard stopped several shipments of guns, ammo, and equipment going from Miami to Cuba, as people in the U.S. that are Cuban descent have a lot of resentment against the current administration there. So there's a lot of move to try to support some of this and provide some arms and some means of let's just call it political discontent. So when you think about what does this mean overall, so 40% or over 40% of Cuba's exports go to China, 15% of imports come from China. So the PRC also expanded the port of Santiago under the Belt and Road, again, which is adjacent to Guantanamo. So there's a lot to be said about what's happening in Cuba. But when we wrote an article back in March, and then I just wrote one, like I said, recently, looking at Iran, Lebanon, and Sudan. And one of the big focal points that we had when we looked at coming out of COVID, and as we start to look at that in the rearview mirror, there's a lot of impacts. There's going to be impacts in terms of inflation, as we're seeing, in terms of food scarcity, which was a problem, and food security, which has been a growing problem since 2014, has only gotten worse. Poverty has risen, which again leaves people frustrated. When you look at South Africa, multiple riots. There was a looting at malls, at some storage centers. You see a big backdrop, and then you actually had landowners protecting land by firing live ammo at potential protesters. A lot of deaths have been coming through. There is a lot of pressure that continues to come through, and it's when you look at Lebanon, some of the protesters they breached a government facility. This isn't going to stop. It's only going to get worse as food scarcity increases, poverty remains increases, and we'll talk about. We have some figures on that in a moment. A lot of these problems are just going to escalate, which is why we think that we're coming into a very difficult period on a geopolitical front, which is why we do spend a lot of time on it. We did special episodes on it. We'll probably start doing that again when there's much bigger events. But right now, we're just trying to tie them into the economy, especially on the food side, because remember, we're back to pricing that we haven't seen since 2010 and 2011. And what did that create? The Arab Spring. So there's a lot of this that is starting to come up again. And this is something that China is also being impacted with. They're impacted in Myanmar. They're impacted in Cuba. They're going to be impacted in South Africa and other areas within Africa itself, because South Africa is not the only one. As we talked about at the end of last year, we did a whole show on rising poverty, and Africa is kind of that focal point of where we see some of that pressure, which is where a lot of this Belt and Road Initiative has been invested, which is why we keep talking about the problems that China has on their debt side when you look internally and externally, but we'll go through that more at the beginning of segment 5. So then when we look at the UN agriculture, you see that was a small tick down, but one of the things that we've been talking about is that it's not so much that it's going to keep going up, it's that it's just not going to go down. And you can see here, like in 07, it just paused. And then when you look at 10 into 11, it stayed up there for an extended period of time. And based on where we see pricing right now and where prices are at the moment, we continue to see that as a problem where prices are going to remain elevated, which is when you think about prices being elevated versus in a rising 10, 11, and 12, inflation is actually much worse on a lot of other fronts, which again is creating some of this additional strife where poverty has fallen again. You're seeing food insecurity rising, which is again leading it to a bigger point where prices don't have to continue to go up to see maximum pressure on a political side, on an agriculture side, and on just a geopolitical setup when we think of some of these emerging markets where there's already strife, especially Lebanon after the Beirut explosion. Again, a lot of these things are just all coming to a head now, which is why we think it's going to be a very violent is one way to put it, but a very explosive decade in terms of things that are going to come out and pressures that are going to mount. So this is something that we talked about on the FSC show, but we just wanted to highlight it again when you look at just where they fall on the rankings. And now 2011 is a good backdrop because that's another point of stress, like what was happening in 2011 and then what is happening in 2021. And you can see that some of the countries have shifted around, but there's still a lot of pressure just in terms of where they are. And the ones that we always like to call to is especially the ones that we wrote about Sudan, Lebanon, and Iran, which is why we continue to see some of these pressure points. And for those that have been following Iran, there's been continuous hacks and attacks within the country. A lot of this is locally driven. It's being supported by outside entities, but it's being locally delivered. And I think that is the biggest crux of the separation of what is happening what do the populists think, and then what is the narrative. Like the narrative is like, oh, Iran, they're not friendly. And by not friendly, I meant the government in terms of that, which is all true, but that doesn't reflect how the people view the U.S. and the West and things outside of, like, they have an equal hatred. I mean, there was just as much celebration outside about the assassination of Soleimani as there was internally. So there's a lot of means or drive to change this, which is why when you look at just the percentage of food imports and the income per capita, I mean, just look at how the income per capita has gotten worse. Just look at Yemen. So Yemen is at 1,924. In 2011, Yemen was at 3,400. So things have gotten worse. You look at Sudan, you look at a lot of these different components. So Sudan was at 5,198. Now they're at 4,000, and they've actually fallen in terms of their impacts on the ranking side. So again, there's a lot of pressure that I think needs to be appreciated, especially when you start looking at places like India and then some of these emerging markets, when we consider inflation, rate hikes, and what that means as we look at going hungry. So when you look at what it is, 811 million people, or 1/10 of the global population, were undernourished in 2020. And I can assure you it has not gotten any better. But it's important to highlight, where was the undernourishment in 2010 and 2011? It was at about 640 million. So we've gone from 640 million in 2010 and 2011 to 811 million. Is that going to increase or decrease the likelihood of people that are going to be very frustrated and look to change some of their backdrop? And I think we both know the answer to that, as food inflation hits the highest since 2011. So even though the UN pricing has gotten, a little bit better, or at least stopped going up, the underlying pricing of these different things, when you factor in beef and chicken and meats, is back to where we were in 2011, especially when you think of corn, and some of the other aspects. Coffee is obviously big in terms of bringing money into a country, but when you think of, wheat, rice, some of these other sides of the pie, you can see that there is a lot of pressure that is going to continue to increase, especially when you think of chicken, because a lot of the individuals that we're talking about can't really afford beef, but they can afford chicken, or normally can afford chicken. So that inflation is going to mean more when you compare 2011 to 2021, when we're looking at some of those apples to apples. So then when we look at U.S. corn conditions, net, it was essentially only a small increase of 1 percentage point. So there's some declines, some benefits, and it really comes down to drought and heat. And that's why we talk so much about it in the EIA show, because that's also going to be a big driver. And when we think about yield and where that yield is on good to excellent, when you look at July 4th versus July 11th, so you can see some deterioration in some key areas: Nebraska, Kansas, Illinois, Colorado, where South Dakota has gotten a bit better just because they did have some recent rainfall. So this can change fairly quickly based on what precipitation is doing. But this is just one to watch. And again, it's not that we can't support ourselves. It's just the more that we keep internally, the less we export, increasing the strife or the pain that would be experienced abroad. So then when we look at South American crop production, here you can see kind of this pretty broad drop in terms of what the expectations were. So when we look at June, you can see that there was a fairly big deterioration in Brazil. And this is what we had highlighted last week, where we expected Brazil to see that big drop. It came true. Soybeans got a bit worse in Argentina, fairly stable in Brazil. But when you look at just what China has been importing, there's still a lot that's being imported, but the corn side is getting a bit worse without it being much better in the U.S., which are two big exporting sites for corn, which just speaks to some additional problems in the global market. Now, one of the biggest surprises was in spring wheat production. So U.S. spring wheat crop at 345 million bushels is set to be the smallest since 1988 and 42% off the recent 3-year average. Now, you can see the handle, that's Karen at the bottom. Highly recommend the follow. These are some of her tweets. These are some of the charts that she posts on Twitter. She's been all over this, absolutely fantastic. And then yield at 30.7, bushels per acre would be the worst since 2002 and 37% off the 3-year average. So again, yield, production, everything is just struggling in general. And then the pre-report trade guess was 459 million bushels, implying a yield of 40.9. The lowest guess was 358. So we missed everything across the board, which is why there was such a big reaction and why some of the problems continue to arise in the underlying. So then when we look at U.S. states ending stocks, when you look at corn, slightly within, pretty much in range with what the trade was. But then when you look at June, things have gotten worse when we consider corn. Beans have been fairly stable. But then when we look at trade on the right side, when we're considering some of the different backdrops, you can see kind of things got a little bit better with corn, soybeans again, but wheat is where we had some of the biggest shock in general. So then when we look at world ending stocks, some of this looks okay when you consider kind of where that ending stock is, but wheat has gotten worse. It's being taken down. And then the other ones, especially with corn, is now going to be reweighted lower a bit when we consider what some of the backdrops are with the adjustments in Latin America. So world wheat stocks come in well below estimates with a smaller U.S. crop, but soybeans exceeded expectations. China's bean imports were reduced a bit to 3 million tons. Corn stocks up on bigger U.S. crop, but China corn imports are unchanged. So it's just, again, supporting some of this pricing in general in the market. Now, barley production, again, a huge takedown versus where we were. Even at the lowest in 17 to 18. So there's knock-on effects. Obviously, we'll talk about the three bigs, but there's also other ones that are being imported, that are being impacted. Then when we look at oats, so when you look at oats, heat and dry weather are sapping yield potential in key growing states. This year's U.S. harvest is estimated at 41.3 million bushels, the smallest ever going back to 1866. Now, other farmers have chosen not to grow oats, and we import a decent amount. So the outlook is down from the agency's June estimate of about 53 million bushels. So it's down. It was expected to be lower than even I think what most were expecting. But the U.S. growing fewer oats, which just means we buy more from Canada. But Canada's oats harvest this year could total about 268.7 million bushels, down nearly 15% from a year ago, because we're not the only ones having droughts. When you look at Canada and you look up in the Northwest, and as we said in the EIA show, there's a significant amount of shortages. There's a significant amount of droughts. There's been fires. There's been a lot of things that have impacted where a lot of this production is. Again, just creating some of this additional pressure when you think of issues on the grain side. So then when we look at monthly China soybean imports, you can see that they still remain near the record. And then when you use that as a cumulative, we're well above normal for this time of year. And just based on what the backdrop is, it's going to continue to be the case. So now that we talk a little bit about the shortages, the pressure on the different, just food availability and undernourishment, here's one of the Delta variants in terms of where some of the shifts are. So as of Sunday, authorities have reported that in the past week, there were 56 new domestically transmitted confirmed cases in China, up from 3. 8 new domestically transmitted asymptomatic. All of the above cases, except one domestically transmitted asymptomatic case, were found in Ruli, a city in Yunnan province along China's border with Myanmar. About half the cases are Myanmar nationals, as we continue to see Myanmar actually hitting new records. So China is concerned, and again, it's small. It's just something to talk about. But here's just the share of Delta variants when you look at just what is the spread. So this is the percentage. It's just important to appreciate that like 98% of a small number just means that 100, like if there's 100 people, 98 of them have the Delta variant. The question is going to be US, which is only at 42%. We've typically followed UK and Italy at different points in time. So the question is going to be, do we see an increase in Delta variant? Maybe, or do we kind of follow and not reach those levels? It's going to be a question of how quickly do we see it go through? How quickly do we see it adjust in general? I don't think it's a huge problem, but it's just something to keep an eye on when we're considering where the next issues may arise. And not that the U.S. government's going to do anything. It's just how is the consumer going to react? Some will say, I don't care, this is over. And some will say, I'm just going to adjust things a bit. And maybe I don't need to drive as much or go to that store. And that's going to be kind of that bifurcated nature of where some of those shifts are. And it could also keep companies from bringing people back full-time, keeping them either on flex or on work from home. And then that's when we start looking at private lending, because on the back of this, we've seen a big slowdown in private lending. There's just been this adjustment in terms of, well, who really wants to lend? China is off the highs, but still elevated. The EM, -9. And then when you look at the G7, you can see that's where the biggest backdrop has come down. And we'll talk about this on the small business side because we're just not seeing CapEx reinvestment. A lot of companies are sitting on a fairly sizable cash position. It's just they don't feel comfortable investing, which again is just leaving all of this down. But without seeing some of this investment, which again is the I, if you think about the GDP calculation, the I remains fairly important, and we're just not there, which is a headwind to global growth, which is why I think it's important to talk about this and think about this when we look at the consumer with food, the business side with private lending, and now when we talk about tax rates, because tax rates are going to be important when we consider where are things going to go? Where is there going to be growth? And how are they going to cover some of their recent shortfalls because deficits continue to rise? So when we look at the deficit side, where a lot of this capacity is coming from. The consumption tax is the one when you think of VAT taxes, when you think of sales tax, some countries get a decent amount from the consumption tax, where for others, it's more about not just social insurance, but individual taxes. So when we just look at the US, which is second from the bottom, you can see that we get most of our taxes from individual taxes and and the social insurance taxes. And those are things where property taxes and individual taxes are on the rise, and the question will be how much does that shift consumption, or would it make it better to have a VAT tax or something that is more indicative on what you spend and how you spend, getting more from the richer individuals who purchase versus trying to work out loopholes. And it's like, if you can do this unless you do this, because anyone who does their taxes understands how convoluted our tax code really is. So when you think about all of these uncertainties, all of these movements, and I bring that up just because there's a talk about a global 15% minimum corporate tax, where's world GDP growth going to be? And you can see that ratings have been taken higher. The assumption is now that we're going to have 2021 over 6%. The question is going to be China at this point, because China, I still think, is very much over. There's a big assumption of where things are, and we're just not seeing that kind of growth roll through. And then when you look at the US and the amount of inflation that remains within the system, there's a lot of pressure on what is GDP really going to be once you start backing out. Okay, well, GDP may be 8%, but if you have inflation of 5.5%, well, then GDP growth, once you back that out, really wasn't all that strong. Nominally, yes, but on a real basis, it's still fairly weak. And that's where we continue to see some of this pressure overall, especially when you start looking at some of the revisions, like where have the revisions been? As we've been saying, India was too high. This is for a fiscal year, so it actually gets elevated as it comes out. China remains elevated in the world in general, but we think that China is going to pare back. Germany's been walked back a bit, which is what we've been talking about. But again, the U.S. and some of these other regions, especially Mexico and some of the emerging markets, are going to have to be walked back given the spread of COVID and some of the additional impacts from the spread of the different variants, which is Delta, then Lambda. Now, when we look at working from home, this is, I think, a good backdrop of, have you been more or less productive? And I thought this was a fun chart where in the U.S. as of October 2020, you can see that a large amount of people say that they're either more or the same effectiveness, with about, essentially 85% saying that they're either more or the same effective given, where they were. And then when you look at Mexico, India, you can see a larger percentage are saying that they are more productive. So yeah, again, it's each to their own. I'm more productive in an office, but let me just clarify that. In an office by myself, not in this open floor plan, because I am still convinced that the person who came up with the open floor plan is destined to be to just live out their eternity in hell, because it is the worst structure I have ever experienced. I mean, I'm pretty sure I'm not speaking for myself when I say how terrible it is. But again, those are things that on why people feel they're more productive away from some of the distractions of being in an office. But there's always going to be pushback in terms of culture, and which is why we do believe that the flex schedule will become the more important one, or the something that keeps some culture but also allows people to kind of break away and get some of their work done in general. So in the next segment, we're going to go through inflation in a bit more detail, especially on the U.S., and just highlight some of those key, some of those key data points that have come out and what do they mean going forward.